was a negative variance in
What you saying?
variance is negative.
All right. Welcome to the call, Michael. Thank you so much for your attendance. I greatly appreciate it. You and Joey. I know usually for the first 10, 15 minutes, I do a little talk, a little spiel, mainly just for YouTube. If you're, this is your first time here, I usually record these and post them on YouTube so that people on YouTube can get an idea of what, you know, a community of investors, day traders, or people that just want to learn stuff, get a chance of seeing what we think about the current market and the market conditions that we are about to enter going into this upcoming earnings week. So I'd like to formally introduce myself. My name is L. Jermaine Russell. I have been a day trader / investor for probably about more of the past 2.5 years. And I've really found more of an exponential of understanding from last year to this year, mainly because of COVID. COVID really put us through a bear market at the very beginning in March of 2020. And it gave me a chance to really see what a market condition looks like, because up until then, the only thing I saw was a bear market. Might have had some dips here and there, but not as much. So as I always try to start off with the purpose that this is only for education, not for you take as real information or things that you would think that a financial advisor would give you. I'm not a financial advisor. My background is in microbiology and biomedical sciences. And that's where I usually stay with all of my energy, is knowing how to apply science into the market, because this is science in itself. Science is all around us. So I try not to separate the two. And then today we'll talk about just a couple of things, you know, dealing with the indexes. I feel like there's a couple of things that's going to happen with a couple of either indexes or ETFs that should push the market up a little bit higher. If not, something that where you can be able to just set it and forget it as far as those indices or ETFs are concerned. And then cryptos. Everyone loves cryptos. This past week, people in the trading group made a lot of money off of either FTFT, MARA, or RIOT. There was also another one that is BTBT. So we'll get into what that chart looks like later. And then also the industry of renting and leasing. So there's a lot of storage containers that have stuff just waiting to be delivered to its intended recipient, but it's not getting sent because there's no way that people are actually transporting stuff from country to country like they typically would. Now, this weekend, because the stock market is closed on Monday, there is supposed to be an exponential push to really get some of those containers moving. So we're going to dive into some of those containers, some of the renting and leasing industry companies that should see some type of upside for this upcoming week, maybe with some sympathy based off of earnings. So with that being said, we'll start first by saying that this is a process, always a process. We're always looking to refine a process. You have to think of yourself as a scientist. Really think of creating a hypothesis and then understanding where your hypothesis might actually be successful or fail, right? We see that with the vaccines right now, with either Johnson & Johnson, Merck, Pfizer, CureVac. There's so many different nuances that go on into the understanding to apply the scientific procedures into making vaccines available. It's the same thing that you apply to your trading process. We always want to make sure that you're not chasing money. There's a lot of stocks that ran this past week, and I saw you, especially in the cannabis stocks, people were chasing the top, and there were bag holders on the way down. you give me 5 minutes, I guarantee you I'm gonna make this quick so we can get to what you really think and have to say about what you're holding or what you're potentially thinking about holding. But we're gonna talk about what the process is and how to refine that process each and every time you enter a trade. So we're not chasing money, we're chasing the process and refining ourselves daily. And the purpose of this group is to really have this many in body, one in mind mentality, right? That we're using each other's mindset, whatever skills that we have that we're bringing to the table, we're using it and trying to apply it to a way that we can make, money at the end of the day. That's the key purpose. We want to make money, but we also want to make sure that we are educating each other as much as we can in the process of making that money. So if we keep that mentality, many in body, one in mind, I feel like that we can go further. Now, previously I mentioned the whole, the process. What is the process and how can we really identify it? I think we start first with using this little concept called the OODA loop. So OODA, if you're not really familiar with it, is something that a lot of business leaders use when they're trying to solve a problem or try to identify where their risk management failures might be in whatever process that they're doing, right? So as we're trying to understand our process, the very first step that we try to acknowledge is observing. Just observing what a company is doing and how the price action is moving. If we can observe the actual circumstances that are coming from that company, anything from the outside, like the Federal Reserve or job claim numbers or anything that could really impact the company, we want to observe to see how they are being influenced. And then after that, we want to orient ourselves. We want to make sure that we come up with some type of analysis that we can now figure out where we can put ourselves within that price action. Because the price action is going to move crazy. It's going to move up, it's going to move down, but we want to make sure that we orient ourselves into a place where we're probably at the bottom, ready for the rise on up. And then the next one is decide, right? So now that we're identifying or we oriented ourselves in the actual price action, we want to decide where we want to put ourselves in there. And then that decision has to come with some type of understanding that you decide that point. Once you make the point to put in a trade, to execute the trade, that you want to make sure that you have not only the entry, but you also have an exit. Because that's the worst thing to do, is just to throw money at stuff, just throw money at a stock, and the stock just kind of does whatever, and then because you didn't really you were slow on your decision, the price started to slip, or and you can't really exit out, and now you become a bag holder, like marijuana stocks that ran last week.
Oh,
and then that goes to act.
Okay, so why didn't you circle the one that sounded to you?
Dwight, you want to mute your phone, please?
Oh, I'm sorry, brother.
Thank you. And then next, you want to act, right? You want to act on the things that you realized after seeing that everything was observed, they were oriented, you were decided, you had your decision, you had your hypothesis, and now you want to make sure that the actions that you take to make sure that whatever it is that you're trying to achieve from that hypothesis is implemented. So I want to say, just take a moment, and maybe you want to do a little bit more research to get a better understanding, but I feel like the OODA loop has been one of those instrumental tools to use to really find better gains in the market, because it has helped me even when in identifying in some of my losses. Like, oh, did I orient myself right? Did I make the right decision? What was I even observing? So little things like that really goes a long way. And then a couple last things that before we start really going into the earnings is that if you're not familiar with patterns, you will see stocks move all the time. Well, I talked about price action before, but this price action is always the same. Always, always, always the same. So you will always have a stock that will rise. And then when it rises, it makes a higher high, higher low, higher high, higher low. High. It will do that until it goes to its peak. And then once it comes to its peak, it usually goes through a channel where it just starts to consolidate. Maybe it might retest its high. Maybe it most likely won't, and then start to fall. And when it starts to fall, that's when you have to identify where its support is and if lower lows are being created. So this is called the Wyckoff method, right? So this is for a stock that's going on the upside. And then from a stock that's coming from its lows, from the highs and then coming down to its lows, does the same thing. It makes lower lows, lower highs, lower lows, lower highs, then it starts to consolidate again between, a support and a resistance. Once it's finished consolidating, then it's going to retest its previous resistance before breaking out to go higher. This always happens. You will see it on almost every chart that you ever come across. Is just identifying where you put yourself in it, right? Because you don't want to put yourself maybe at resistance and then watch the stock drop. And then you're like, well, I'm now down 10% because I wasn't paying attention. I wasn't observing. I wasn't orienting myself along with the price action. So this, once you get a chance, look over the Wyckoff phases, the Wyckoff method, and see how backtest it with the stock that you've probably invested in before, and maybe it will help you. So with that little spiel being said and done, let's get into these earnings. There's another week of earnings that will be moving stocks heavily again. This will be happening until I think the first week of March, where we'll have at least 100 companies coming out with earnings. And the ones that actually do well in earnings, those are the ones that you want to focus on. Yes, they might say, oh, that, they didn't meet Wall Street expectations, or they did meet Wall Street expectations. That doesn't matter most times. I'll say at least 80% of maybe 70 to 80% of the times, those numbers really don't matter. What really matters is the price action after earnings is released. Once earnings is released and then you see the price action go down, then that stock is not going to do well. We saw that last week with Uber. I've always said that Lyft was a better car service than Uber, and the earnings proved it, right? Even though the earnings on Lyft said that they were good, the earnings on Uber said it was good, but there were certain things that came with the ride sharing of Uber that Wall Street didn't like, and then the price action went down. So looking at Uber as something that I would want to day trade would not be a good idea right now. Maybe if you want to hold it long term and catch it from its lows and then ride it on up, that might be an option. But stocks do this all the time when they come out with earnings. So we have Palantir here. They're coming out with earnings on Tuesday. And once again, I want to reiterate that Monday, the market is closed. You also have CVS. Well, let me go back to Palantir. Palantir, government contract, they're finally coming out with their earnings. And we're going to really see if they are worth what they claim to be, because there's people that's just pumping this stock. And I still think it's worthless. But at the same time, they have some type of influence when it comes to being a part of government infrastructure and their computer systems. Then you have CVS. We got to start thinking about vaccines being distributed at local pharmacies and stuff like that. So CVS naturally would be on the list. Advanced Auto Parts, AutoNation. These are two that if AutoNation come out with earnings, anything like Carvana is a $300 stock. They just came out in 2018. They haven't been around for too long. AutoNation, they're about $78, maybe $80 stock. They still do the same thing. That people want cars. The only difference is that with Carvana, you can it's like buying soda for your car. So, or buying like soda drinks at a soda dispenser. with cars. It actually looks really cool. If you've never seen it, they have a nice little building out in Arizona, and it looks amazing. I actually love it. I like it. I like the way it looks. And then another one that I think that would be really good, and I didn't highlight Boyd Gaming, but I feel like Boyd Gaming or anything in the gaming space is always going to be something good to look at. So, you know, maybe we should look at this chart as well. But also energy. Devon Energy, ready to break out. Energy and oil stocks have been moving. You know, OPEC have been finding some type of, I guess, balance with the rest of the world on how much oil they want to dispense out. So Devon Energy, which is a fairly cheap stock, could possibly go a lot higher after the close on Tuesday. You know, and then we start thinking about, well, if things are going to start reopening, you know, will the Hilton or any other hotel company or any other, like something else with gaming or any type of casino type of company, will they also start to find some upside, right? So I'll show you how to look through those things, how to find, how to really like educate yourself and really look at the company from a whole perspective. Not just because it's moving up, that means it's going to go up. That's not always the case, right? So you want to start investigating it a little bit more in the background and trying to figure out what's really happening. And then just to round it off, we have like SunPower, Marathon Oil, both in the energy. Of course, SunPower is a little bit more cleaner than Marathon Oil, but like I said, with Devon Energy, people on OPEC are figuring out how to really keep oil still fluctuating around the world. But I feel like Tilray, because weed stocks are weed stocks and people love weed, I'm a big fan, but you know, I feel like Tilray will be one of those things that people are going to be more interested in just because they are a leader when it comes to weed stocks. People like Canopy, people like, there's another, I can think it's called Green Thumb, but Tilray right now has been proven to be that leader when it comes to the weed industry in itself. So I know I have a couple of other things highlighted. I really like Roku. Wish I held them when back from 2018, but I didn't, and they're over $400. They should be approaching $500. So with that being said, I know I covered a whole lot already in the past 20 minutes. Does anybody have any questions that they want to like throw out there before we start, you know, diving into some of these earnings? If nobody has any questions, I will keep on going. So I'll just wait a little bit.
You mentioned about Palantir.
Yes, you are the biggest advocate for Palantir.
Yeah, it's almost hurt a while ago when you said that.
Yes. You say it hurt you?
It almost hurt. I get a little pinch a while ago when you talk about Palantir.
Yes. Yes, I'm not a big fan of Palantir just because I feel like it's overhyped. I feel like the people that are pushing it, they're manipulating it way too much. Yeah, you can use it as a let's go to the chart. Let's go to a chart first. So when we go to his chart, right? I've been in it before. I've earned and I've lost, but I also feel like once it fits, I know that you like it. I'm not a big fan. The price action is too wild, too wonky, and any slight news moves it. So if you're not conscientious of where you put your price points in, you will get burned. And luckily, I can lose $100 and be fine. I can lose $300 and be fine. But for general education purposes, when we're all trying to actually find stocks that will give you some upside, Palantir doesn't. It seems more riskier to just throw money at Palantir without any positive news. We just know it's with the government, and if you know earnings back in November, it was slightly okay, but now this is the real test. So this is the real test that everyone's looking for this week when it comes to Palantir. So hopefully it passed the test and it proves me wrong, because I love to be proven wrong. Right now it's holding support at $32, roughly $31.91, and then let's see when the market opens on, or when the market closes on the 16th, let's see what it does on the upside. But I know, Fitz, you probably have some different understanding of Palantir.
Well, one of the things that with Palantir is a cloud stock, and it's one that has been talked about long. I mean, very often, and especially this big government contract that it had. The next thing is that I remember Twilio.
Yes.
Twilio, that's another pain in the neck. I remember when it came out and it was hyped and it went up and then it came back down and it linger within the $20, $30 era there.
Yes.
And nobody paid no mind until finally, once they consolidate there between there for a good while.
I'm gonna start. We need to start taking C-months.
Whoever, if it's not Fitz talk, if you're not talking, please mute your mic so we can respect the people that are speaking. Please.
Yes.
Thank you.
So it lingered within 25 and the early 30s there, and all of a sudden it just begin to move until look where it is now. So
Twilio, right? Or
Twilio, yeah.
Yeah.
Twilio.
So this is Twilio. This is what Fitz is referring to.
Yeah.
Yep.
TWLO. Oh yeah, TWLO.
So I agree. Like, you will have companies like that where you will have a lot of haters, right? I hate every stock. Don't get it twisted. Well, I come into this chat specifically saying I don't trust any of them at all. But when you know that when you have something that pushes the stock up higher, like Twilio did, like what Fitz is saying, then it gives you reason to buy it. And it did exactly what the naysayers, or did it exactly against what the naysayers said it would do.
So there's something going on underneath the quiet, because remember recently they came out and said doesn't value more than I think it's $10, $15. Remember?
Yeah, I remember.
And myself and a few people, I sell out some same time, and it just went. It didn't even go down $5. It went now about $3 and stay there. It was that time it was in the 20s, and see how far it is now, and it was up more. So as I said, they play this little trick on us retail players that whenever they know something good was coming out, especially because all of that came out, I think, before the news of the government contract.
Yes.
What they want is us to sell out these stocks, and then they can buy them. And before you know it, they go right back up. So whether it go down or up, I'm not selling mine. If you go down lower, I bought it in the 20s. And if you go down lower, I'm going to buy more. I'm not selling it. Doesn't matter what they do, I'm not selling it. I'm going to keep it because I missed too much good opportunities to allow them to do the same thing over. They did it with AMD, Plug, Filler, and all of those good ones. And I'm not going to allow that to happen to me again. So I rather keep it and just ignore it. If it even go down, I'll buy some more, just ignore it. Because I also, you know what, which other stock that I own was the same thing, APP, APPS.
Yes.
I had that too, you know, when it was cheap and it was like about $3. And they did the same manipulation with that too. And look where it is now.
So for everyone that is probably not familiar with what Fitz is saying when it comes to manipulation and how stocks, you know, that price action really moves. You know, a lot of times we have difficulty, you know, just really sitting on our hands, because there's a lot of these stocks that, you know, you could really just sit on your hands, just watch it run. However, there are those times where it does have that pullback, and some people would like to add to their position on the pullback versus selling their position, which, you know, either strategy can work, because, you know, I'm not saying that my strategy is bulletproof. I'm not saying that Ray Dalio's strategy is bulletproof, which if you've never read anything that Ray Dalio has to say, you should probably get his book. Ray Dalio has done interviews with Sean Puffy Combs. So if you're not very familiar with him, then at least look out for a video on YouTube where he did an interview with Puffy. I think it was last year or at the end of 2019. But what Fitz is saying with Palantir, yes, like it was at $10. I was around here too, waiting for it to do something, because it was just playing with $10 and playing between $10 and $15 for a while. And then I sold out because I was like, I'm getting tired of it. And I believe at the time it was overbought. So that's another thing. I have to orient, right, everybody with the chart. So what you have on the chart right now is some moving averages. So we have this green line, which is the 5 exponential moving average. This exponential moving average is just a measurement of the price over the past 5 days. All right. So there is this exponential. Anytime the stock is trading above this green line, it tends to go higher. You got this teal line. It's a 20-day simple moving average. It's another mathematical equation, but it's just a price. It's just a moving average price over the past 20 days, right? And then typically you will see a red line that's under here. It's a 200-day simple moving average, and it's the price point or moving average price over the past 200 days. The stock hasn't been around that long, so that's why you don't see it like that. You don't see the 200 simple moving average. Then you also have the MACD, which measures the momentum of a stock. The RSI, which is the relative strength, meaning that if it's overbought or if it goes oversold, right? And we'll get into that. Then I have the volume here, and the volume, which shows you the, you know, if there's buying or selling. The green mean uptick in buying. The red means downtick in selling. And we have the TTM squeeze, which we all have recognized that it is very valuable. Will tell you if a stock is going to go down or up, if it's going to consolidate to go up or consolidate to go down. Currently it's consolidating to come down and is testing support, right? So that's what's going on this right now. And then I have these red lines on the actual chart here, just to give an idea of where resistance is and where support is, right? So I have support here right around this 31, I said 80-ish, really $32. It's not an exact science, but you know, we're going to say $32 just to round it off. So with Fitz, as he, you know, it could bounce on Tuesday when the market opens. You know, usually when you have 3 red candlesticks that come down like this, the next day is typically a green candlestick, right? And if it's a strong green candlestick, like it did back here in January 22nd, that is a good time to buy, because the green candlestick shows you that this is a significant price movement. On the downside, if you have a strong red candlestick like this, that looks very indecisive from January 28th, typically it's going to come down. Now, mind you, I did say if a stock trades above this green exponential moving average, it will go up higher. But if it's red, chances are the very next day, it might be a red day unless there's news that supports it. But here, as if we compare all the technicals that I just laid out for you, where it comes with the MACD and the RSI and the volume, we see that in the TTM squeeze, the TTM squeeze really didn't confirm if it was going to, didn't confirm that it would go higher. So that's the one caveat. Sometimes the TTM squeeze does not work for your benefit all the time. But I say 8 out of 10 times, it does. And it gives you an idea that, hey, it made a new high, which is my rule. If it makes a new high, it's going to pull back. Mm-hmm. It made its new high, did exactly that, pulled back. It's no longer overbought. So that means people are probably buying. So this goes back to what Fitz is saying. Hey, it's going to pull back. I'm going to buy some more. You buy some more, maybe at this $32 area at support. When the market opens on Tuesday and it's a green day, and then, you know, before earnings comes out, it tends to go up higher. But who's to say that we know what earnings is going to do? I have no idea. I will never ever try to guess what earnings is going to do. I'm not in the business to predict. I'm in the business to react and respond. I am a martial artist as well. So like I respond to activity that's coming to me. And that response says that it's coming down. I would have sold when it goes to its all-time high. But I will show you an example where I didn't do that. And I end up having to I end up turning my $300 win into a $100 loss because I didn't sell and follow my rules when it went to an all-time high. So I'll show you that chart after Palantir. Fitz, do you have anything that you want to say about Palantir? About like if you have any other strategy that you would employ going forward?
No, I just think it's so good. You remember mentioned I have a few stuff that I bought for the long term.
Correct.
The only one that I don't have now is Mara.
You let go of Mara?
Yeah, I let go of Mara. So, you know, I was in and out of it, and so on. So that's my fault right there too. So I decided that I'm gonna keep these 4 though. I'm gonna keep Fubo, CIIC, Palantir, and hold on. Yeah, Fubo, CIIC,
yes,
PACB. And I've been telling you about that one. Are you not paying it any mind?
No, I did. I just didn't buy it. I refused to buy it just because at the time I just couldn't buy it. Well, okay. I said couldn't, but yes, it broke out. It finally broke out.
Right, and for SoftBank, I've been constantly from a whole lot of money in there. SoftBank.
No, SoftBank, so PACB is a
Genomics.
Yes. Go ahead. Speak on it, Fitz.
Yeah, it's a genomic company, and it's in the category. It's only like you have ETHE,
which
Cripser, NTLA. I think is one NTLA.
No, I think it's NLTA.
NLTA, yeah. ETHE and Cripser. At the time, it was the reason why I bought this. I remember I was with this company. They offer you a platform where you can put the stock in, where you choose, and whenever it meet the criteria, it become bullish. Then it alert you. Mm-hmm. And they have a private area there where you have to pay to get information. And they were talking about the gene editing thing that was gonna, become big. And at that time, ETHE was trading for like about $9. Between $7 to $9 there. And they were saying that, if you want to join that club, you have to pay a little more money. But I didn't pay it any mind. But I remember during the conversation, that was the only one that I mentioned. I don't know how I found it, but I was search the site and I found a little area there where they were talking. And it went from $9 to almost $80 or more. And that was like about a year and a half ago.
Yeah, ETHE, they're the same genomics company into genetic therapy, just like PACB. I actually like PACB better than ETHE.
Yeah, that's why I stick to it.
Yeah, I remember if we go back about a month and a half ago when you first mentioned it, I tell them I like PACB. I didn't like ETHE. Right. Because it had more downside at the time.
And at the time it was the cheapest one. So, you know, when you're a certain area is when they are, it's something for the future, you want to catch the one who is cheaper, who is getting a lot of interest, because when SoftBank begin to pump in so much money in it, then you know that something is happening.
True.
And they team up with the one that you mentioned, NTLA, recently.
I'm trying to remember. And was it NLTA? It's not it. I don't remember that ticker per se, but I know it's like here it is, NTLA. That's right.
NTLA, yeah, NTLA. What's the symbol? NTLA?
Yes.
Yeah, both of them team up recently.
So Fitz makes a great point. You know, this is why we have resources to use in order to like really research our stocks, right? We want to make sure that whatever resource that we get, that it at least leads us into the right direction and understanding, you know, if this is a good buy or not. You know, PACB, and I know we're getting a little off the agenda, but I feel like this is a perfect example where it was coming down, just like EDIT and NTLA, all those Intella, like it was coming down and it's consolidating. If you remember the Wyckoff pattern that we talked about earlier, where it would go up and then consolidate, come down, right? It would go up, consolidate, go up, consolidate down, go up, consolidate down. That's what it's doing. Now it's consolidating again. And then it went up. But each time it went up, it went overbought. So you always want to look to see where it is on this RSI. Because even though right now, you know, the MACD says that there's exponential movement going on the upside, the TTM Squeeze says that there is still buying on the upside.
Yeah, there's a lot of room to go up there.
My biggest rule is that it made a new high already. And once it makes that new high, it can always come down. However, if you're not aware of candlesticks and knowing what candlesticks do, those are really, really great indicators as well. Anytime that you see a candlestick that kind of looks like this hammerhead from the Mario Brothers, it tends to go up higher. So I can only, even though it made a new high, I would have been out of this already, but it could possibly still go up higher just because of this candlestick. And if in looking at candlesticks, just to make a reference, Japanese candlesticks, it's a book. You can find it anywhere on Google. And if anything, I will probably attach a PDF, or I can email you, text you, what have you, a PDF file of the book that I have, right? I probably have to blur that out for YouTube so they don't come and get me. But like I could send you the book, and that way you can be able to look at the candlestick pattern yourself. Because looking at candlesticks is the name of the game and understanding.
You can send us.
Say that again?
You can send it.
Nice. I will send it.
Yeah, so I'm seeing this going way up for the future. So join the ride.
And that goes, well, I'll show you, because I don't want to go too far off, but I want to show you what I actually did wrong with AYRO, because when I said when a stock makes a new high, I tend to sell it because I don't want to hold knowing that it can come out with shares being sold off, right? You'll have a direct offering oftentimes when a stock goes up too high. GameStop didn't do it and saved a whole bunch of people. I'm so shocked it didn't do it, but everyone else did. Like I think BlackBerry did, Overstock did, Bed Bath and Beyond did. All the stocks from the Reddit community that went up exponentially higher. The company insiders was like, well, this is free money. We're going to take it.
Yeah.
That's exactly what AYRO did to me. I did when I first bought it. I bought, I tend to buy on the hour chart, right? And I bought on this green candlestick because I said, oh, it's a strong green candlestick. It's going to go higher. So I bought it. It pulled back, which I anticipated, but it was still trading above this green exponential moving average. I'm sorry, wrong day. I'm sorry, wrong day. I bought it when I rebought it on Friday. So I was looking at Friday again, but I bought it on this day. And then when I bought it on this day and it went up higher, I did not expect this exponential move. And you see how it went overbought on the hour. Anytime
for a little bit.
Say what?
Stay there for a little bit.
Yeah, it was running. I stayed in for a while because I was like, oh, okay, it's, I was not expecting it to go higher. And this is the time that it caught me with my pants down, because when the market closed and we wake up Monday morning, or not Monday morning, but Thursday morning, it said that they were doing a direct offering, and then it started to pull back, right? So this exponential win ended up becoming a loss, right? So I had to just take my $100 loss, which is relatively nothing in the grand scheme of things, but take that loss and understand that, hey, once you have your set rules and you know that your rule says it makes a new high, sell it, do exactly that, because that's why you made the rule. So I just wanted to show you that my blunder that I did wrong. But at the same time, I am a chart technician. I will follow the chart all day. So that's why I rebought in on this hour and just held it for the rest of the day. So I wasn't expecting it to do any of this. I thought it was going to come down below 7. It didn't do that. It actually held, and it should retest the previous high, in which I will sell once it breaks for a new high. Because this is still a Wyckoff pattern. Goes up, comes down, consolidates, goes back up again. And this is on the hour candlestick.
I want to ask you a question.
Yes, sir.
You mentioned that on TD Ameritrade, you can sell it before the market is open from 7?
Yeah, I had options in this one.
No, I mean the stock, not the options.
Yeah, I had the options in this, so I can't sell the options.
No, I know that was the option, but I'm talking the stock itself.
Oh, okay, yes.
But I tried it and it didn't work, so I'm wondering if maybe I turned off the aftermarket. Is there something that you have to turn on to be able to participate?
Oh wow, not that I know of.
Because I don't really have any aftermarket turn on mine. So
the only thing that I can think of is like when you creating your order entry,
yeah,
you change the day to extended.
Okay, so maybe that was the problem.
That's the only thing that I can think of.
Okay.
When I first was like, oh, okay, I can sell at 7 in the morning. Like that was the thing that was messing me up, because I didn't know about this.
Okay.
So that could be it. That's the only thing I could think of.
I discovered something too. So pertaining to the volatility thing there. So I don't know, when you're ready, you can, if you want, I can share it with you, because like, oh, you buy a lot of option. It's nice to know where the volatility is.
Nice. Yeah, I want to get into that, but I want us to also go over these indices.
All right.
Because
yeah, that's what I'm saying. Whenever you're ready.
Yes, sir. So to go back to what Fitz was saying, right? And I know James, he's on the call as well. So we're gonna go to one of the ETFs first before we get to the indexes, because pretty much damn near the same thing to me, but not really at the same thing, is ARK. ARK is really buying up a whole bunch of shares, and it's really because of Cathie Wood. She is looking at anything that will disrupt the industry all the way through. So going back to what Fitz was saying, they came out with some news saying that there were 15 big ideas that would be disruptive and innovative that they're looking at. And, you know, the irony that Fitz brings up PACB is because that, you know, one of those 15 things was in genomics. If I go all the way down, it was not 3D printing, but it was dealing with not just multi-cancer screening, but cell and gene therapy, right? So we know that that's going to be one of the big things that people are looking towards outside of energy, right? Because, you know, we have that. We see that there's deep learning because, you know, people are learning from home, even though we're about to reopen a whole bunch of stuff like the schools and things like that. There's like data centers. So when it comes to like Palantir or Big Commerce, which is another cloud computing company, that's something else that people are really looking into investing in. So we'll see this week where all the cloud computing starts, you know, continue to let out their earnings, what they really do. Virtual worlds, video games, like I mentioned earlier, with Boyd Gaming. Yeah, Boyd Gaming, they're coming out with earnings. This might be a company that Cathie Wood and her goons of share buyers might actually get into. You know, digital wallets. PayPal wants to make it accessible that when you buy a cryptocurrency, that it not exponentially, like instantaneously is either removed from your account or added to your account, whether the funds are added or the funds were withdrawn. They want that speed to be exponentially happening. They don't want that, you know, what happened to Robinhood where they didn't have any money to really give back to their investors after closing out their trades. They don't want to have that issue. They want the transaction to be over and done with right then and there. So PayPal, which has always been on one of my top lists with JP Morgan, is right there when it comes to digital wallets. And then of course, Bitcoin. Fitz mentioned Mara before. You know, there's a couple of others that that will continue to move. And then obviously institutions are getting into Bitcoin. And if we see SoftBank put more into Bitcoin, it's going to be crazy.
You remember that conversation that I had with you when you came by the workplace about the guy who spoke to the black guy on CNBC?
Which one?
When I told him that he was when the guy was telling the small people to buy a lot of Bitcoin, and he was telling him that he was saying that to the guy, you know, the dark guy on CNBC, the dark valid guy there.
Oh yeah, he didn't like crypto at all.
Yeah, and he's saying to the guy, you know, you're telling people to buy. What if people lose their money? So the guy just look at him with a straight face and say, "You guys always telling poor people not to do things, and at the same time, all these institutions buying it up." And you saw what happened though, and he couldn't give an answer after he just end the conversation right away. You see what happened now, right?
Yep. Like I didn't see I don't remember the conversation all the way through, but I can see him saying that this is John Ford.
Yeah. The guy just telling with a straight face. So you guys keep on telling poor people that they're not, they mustn't do this and they mustn't do that. When at the same time, all these institutions buying it up. And look what is happening now.
Yeah.
Okay.
And Bitcoin went up to close to
49 something today over the weekend.
Correct. Yeah, and Morgan Stanley, I think,
yeah,
50 billion.
Morgan, 150 billion. Chase workers begin to rebel against the boss, said that they're missing out on it because they won't allow them to buy it. So now they begin to want to look into it. So there's a lot of things that says, believe me, it's going straight to $1,000.
Oh, you mean it's going to 100,000?
100,000.
Yeah. It definitely is. It definitely is. I don't see it going lower than 45.
No.
I don't.
No.
Like it went to 46, I think on Friday. And then yesterday.
Went to 49 over the weekend.
Say that again?
It went to 49 something over the weekend.
Correct.
Now, historically, it'll take an 80% drop. So coming back to 20 is not an impossibility for a major thing. But with all the institutions, I don't know about that.
No, I don't believe so. 150 billion and Chase not involved yet.
Mm-hmm.
Wow.
Yeah, it's a different thing now.
Yeah, it's a different thing, different ball game. All institutions come diving in now.
So right here is the Bitcoin futures. I haven't seen one for Ethereum. So I've been trying to find out where Ethereum futures are, but or at least what their ticker is. But the last time I drew in any type of support and resistance lines was, when it was about to cross 40,000 or about to test it, right? And now it's about to do the same thing it did before, right? It did this whole consolidation pattern, broke out, pulled back a little bit, went up, pulled back some more, and then now we're here at this 49,200 area. So I'm with Fitz on this one. I don't see it with even Morgan Stanley's not in it yet. I still don't see it coming down to the 20s. But history always repeats itself. What James is saying. Sometimes it might not be the same, but it'll probably rhyme, right? So but what can you hurt yourself by putting in maybe $100, $200 into Bitcoin?
As your friend said, I don't remember his name. The one is on the line now. He said it's a long time thing. It's a long term.
Correct.
Yep.
So when you're doing long term, you don't worry about the ups and downs. You don't worry about market chatter. The little thing that go up and down. You don't worry about that because it's a long term. Everybody talking about. I heard a guy just came on Bloomberg and said that later on we might not use cash. It might just be the digital wallet.
I think it will be all like like you said, digital wallet.
Yeah.
Anything else outside of that. Is mine? What? It's not sharing. Hold on. Just want to make sure the screen was sharing. Sorry. No, you're absolutely right. It should be digital. It should be all digital wallet. I don't see, if you have Coinbase or if some people don't trust Robinhood still, I get it. But
yeah.
But if you have PayPal, you can buy cryptos on PayPal, right? James, can you reiterate any other wallets that people could possibly use that they can be safe with?
Yeah, Coinomi can take all types of cryptos, all of them basically. And you could do some converting, although I have a friend on the line, Michael, who had a rough time with that one. It depends when you do some of these transfers, but Coinomi.
But you can't do those on the platform. You have to do those on like Google. You have to Google it.
What's that? Well, Coinomi is a wallet, and you can not coin one. It's Coinomi, Coinami,
okay.
Like origami, Coinami, Coinomi, and that's a great way to store your cryptos.
Got it.
Can you spell it again? C-O?
It's on the screen at the top. Coinomi, Coinami.
Okay.
And this is excellent. I know, like I had Bitcoin, and when it split, I got Bitcoin Cash automatically, and the same with that turned into BSV or some other thing. But it's really good to hold any type of coin you got. And if you are, you know, if you're doing long-term stuff, depending how much you have, you know, some people believe in cold storage, which is definitely a solid solution. But, you know, this is all about passwords, encryption, and being careful with yourself. So a lot of people tend to keep it in the Coinbase or wherever. Like with PayPal, I mean, it should be understood that it's not actually, you don't actually own Bitcoin, the same as Robinhood, because you can't send it the same way, like as if you had a wallet. Like if I had a wallet and I want to send you some crypto, I could do it automatically, very easily. With PayPal, I don't understand what's going on, the same as Robinhood.
Yeah.
What about Cash App? Is it the same premise?
Cash App, I haven't used. I'm sure it's the same premise though, because, you know, they're trying to make it accessible to people. I would have to look if you're actually getting it, but if you don't have a wallet, like if you don't have I'm looking at it now, if you have a wallet in it and, you know, you can say, send your crypto to someone, and yeah, it's a real crypto, you know, you actually have it.
Mm-hmm.
But if not, like Robinhood, you know, you can buy Bitcoin, but it's not like I could take it out.
Gotcha.
Yeah.
Like I haven't sent it to anyone else's wallet.
Have you sent it to your own, to another wallet? You know, like that's the test. Or can you trade it? Can you trade it? So like when you want to trade, or in Coinami, like there's two, like Foxify and Chain. I forget the names of these things, but you know, you could convert your Bitcoin to Ethereum, or your Ethereum to Doggy Coin, or whatever you're interested in playing with, as well as bring that to another exchange and actually do trading. Because, you know, just like you're following with the charts, this all happens in crypto land as well. And it's all the same stuff.
I'm gonna have to try it out this week and see if I can send it. I have Crypto app, and I have crypto.com. The crypto.
Right, I haven't used that. I've just been seeing that around. That one actually might be more real.
Yeah, see if maybe I can send some Cash App.
That's what you want to do, is see if you could send it. Because
she sent you the email?
Joey, can you turn that mic? So yeah, having the ability to hold on to your own money is essential in this game.
Right.
So wait, so let me just double back a little bit. I know you're on crypto, but is this gonna apply to stocks as well on Cash App?
Cash App, does Cash App do stocks? I mean, in general, with any stock, it's not like you don't have I mean, like with Robinhood, I could send it to Webull if I wanted, but it's a different operation than when we're talking about in cryptocurrencies.
Okay. Well, I
mean, stocks are more like if you had a house and you wanted to sell your house, it's not like you can just transfer it.
Transfer the house, right?
Yeah.
Oh, I see. Because of the nature of coins themselves. That's
exactly the nature of coins and the nature of stocks, which are like more physical than digital.
Great.
Thank you for sharing that. I appreciate it.
Now, Jermaine, the one thing, I don't know if everyone knows how to create all the charts that you have. And I think that is a tremendously, I mean, we're learning how to read them, but does everyone know how to set it up on their ThinkorSwim or whatever platform they're using?
No, that'd be great to learn how to set it up.
Oh, yeah.
I don't know if that's for this call or not, but I think that would be very educational for many.
I have to agree with you on that. I have not sat down and be like, yeah, we're gonna do like.
Yeah, because it's like so key. Like, you know, I mean, I have some charts, but not all of them. And I know that would be big. And I don't know if you can share somehow like templates or anything, but.
Let me see. How can I can't say that I do anything differently, right? But
Well, I just don't think people know how to even look at what you're looking at on their own platforms.
You're right. You're absolutely right. So when it comes to all right, so when it comes to the charts, right? The way that I think that we tend to set them up, or at least the way I've been setting them up with the moving averages and the MACD and the RSI with the volume, is that when you have your chart up, you go to the studies tab. And when you click on the studies tab, and every platform is different, right? So I can't say that this is going to be the exact same way on E-Trade or on Webull.
For sure.
But when you do go to the studies, you want to look for, I already have them kind of loaded, but I'll edit my studies. The studies that I have up is that what I'll do is I'll go over here and just type in moving average, right? AVG. So when I go to moving average, I see moving average exponential. That's what I want. I don't know what the other ones do, right? I don't know what those do. I just know that the moving average one is probably one of the better ones for the upside. Because when the stock trades above that 5 EMA, because that's what it says right here, 5 EMA or the 9 EMA, on the exponential, it tends to go higher. So when I go back to the studies, like let's just start from a clean, let's start from a clean one.
Great.
Yeah, let's create it. So we're gonna, I don't want to remove all studies, but let's make a new study. How do I do that? We're gonna load one. No, I already have some loaded. I'm trying to remember how to even do it now that you mentioned it.
So you have a saved study, as I saw.
So what I would,
I mean, maybe another time. I just
I have to think back on.
Yeah, sure. I'm not suggesting, because I know, like, on the spot it might be difficult, but that would be great for the next time.
Yeah, what's the question? I was looking at something else. What's the question?
Well, the basic question is how do we set up our charts?
Do you have the same platform like
I mean, I personally do. I don't know if everyone does.
I have the same platform.
Okay.
It's just the values of, like, all right, 5-day moving average is used for 20 days, used for 200 days, used for just like a quick. I know it's 5 of, like, yeah.
Gotcha.
Yeah.
So they're all price assessments. Like the moving averages are not guaranteed prices. They're only an idea of where the price can go, right? So I know I mentioned AYRO earlier. So I'll explain why I got in on it originally based on the actual moving averages. First and foremost, on the actual day itself, but I'll just slide it over like this, right? So on this day, this was the 9th, right? It had a green candlestick. So like what I mentioned before, when you have a strong green candlestick, and relatively, it wasn't that strong. It was just strong enough to give notice, right? It traded maybe at a volume of 5 million. The float is around 23 million. So, I like low floats, and I like low floats that have a good short percentage. I believe this one had about 15-20% of a short float. And it was also testing the resistance. That's why I have this red line here. And this red line is just a trend line. You can right click it. You can right click, I should say, on the chart, and then go to create, where are you? Like, now I can't find anything. Draw a line. The drawings, here you go. So once you have your trend line, then it's easier. I'm sorry. I'm like, how did I even create the trend line? Because now I just like copy and paste the trend line because it's always the same.
Oh, you come down. You can come down to the bottom there where you have that little thing, pencil looking thing down to your right there. At what slash looking thing there?
Slash.
The slash. Yeah, the slash right there. Come to your right. Right at the bottom where the plus and the minus. Yeah, where the slash, you pass the slash, man, right? Where the plus and the minus is there.
You talking about down here?
No, come down more. Yeah, right there. Click that.
Oh, it does it there too. Oh, lit.
Yeah.
Okay.
Yeah.
All right. So you can do that. That's what I do. I just right click it. I'm making it more difficult than necessary. So usually I just click on the screen with the left click.
Yeah.
And then it gives you a line.
Yeah.
And then from that line, now you have a line. You just click
right there. Yeah.
Line. Then you right click. Then you can do the edit.
Edit. Yeah.
Edit the prices there. I try to make it as simple as possible. I don't know why I'm having brain farts all of a sudden.
Yeah. You weren't prepared for that.
It's still this is something I do on a regular trading day. So I don't know why
yeah, you just click the slash down there and it give you everything, even the Fibonacci.
I'm
right
glad
there.
you mentioned that.
Yeah.
I got a quick question. Back to the Bitcoin. I don't know if you guys are familiar with Grayscale Bitcoin. It's a stock product that kind of mimics.
Yeah.
Yeah.
I have some.
Yeah, it seems like, people are getting into it. I think it's GBTC.
GBTC, and they're doing an Ethereum one soon.
Oh, really?
Yeah.
Would that be something that's like it mirrors the growth, right, of Bitcoin?
Yeah.
If you're not too like confident or privy with the wallets and Coinbase, that's a way to get some exposure.
Yeah,
it's a way to get exposure. It's basically the same thing, except you're not, and what's good from a tax point of view is you don't actually have crypto. You're buying into a stock.
Right.
So stay, like if you, I don't know if you guys have IRAs or anything and are using these in your IRAs, but that's a great way.
Great way to get exposure to crypto and
and not worry about any tax implications.
I think it's like an ETF.
It's the same.
The ETF, like
it's kind of it's on the OTC market, so that can get manipulated easily. But I feel yes.
What's the symbol? The
GBTC.
We're on
GBTC.
It yep.
That is value $48.
Yeah. It's on the OTC market.
It's on the OTC?
Yeah, look right here, OTC.
Okay.
Yeah.
So maybe it's best to go Mara or Mara.
No, it's like with
RIOT.
It's like with Joey. It was like what Joey said. It was Joey, right?
Yeah.
It's like what Joey said. Like if you're not too privy or too confident with the other crypto related stocks, like this one has been just uptrending miraculously, like forever. It's just been going, and it's not even overbought yet. It's going to break out.
It's mimic the Bitcoin.
Correct.
My only issue, I had it. I still do, and I haven't let go of it. But they did a split, and that was like a little worrisome a while ago. And they have the potential to do things that crypto can't do. So not that splitting is always bad, but it can be worrisome when they're whatever they're doing.
Agreed.
I think maybe the safest bet is Mara.
GBT is pretty well established, one of the first. They are, I don't know Mara, but I would take a look.
Yeah, Mara is just like FTFT. I told some people to buy this. It's another fintech kind of thing.
Okay.
Kind of like this. It's same thing as BTBT, and RIOT, which RIT and Mara are both overbought. So that's why, like, when Fitz said that he's out of it, I thought you already sold when it was like overbought, but you said you got out of it sooner. So
no, I got out of it a little earlier, but I bought some spread on RIOT last week, so that was good.
Good.
And it went up 2 days after.
So on this left side panel, this is where pretty much anything related to Bitcoin, either if it's on the open market or on the OTC market, those are the ones that are related to Bitcoin. So if you see it here, some of them are in like 9-cent territory, some of them are $1.40. But like I said, PayPal is like my number one. ETHE is kind of same as GTBC. What was it? GBTC?
GBTC.
Yeah. So it's pretty much it's similar. It's just Ethereum. It's the grayscale for Ethereum. And it's $20. Not overbought. Should go up higher too, unless they do a split, like, you know. Yeah, and that's what makes it problematic. But it still should go higher. Trying to think. Oh, okay. So back, Joey, I'm sorry. I know I was a little scatterbrained trying to explain the entries of the moving averages and stuff like that. But typically what I do is I go on the hour chart. I use 3 different time periods. I use the daily, which shows me its whole history.
Long term.
I want to see that first and foremost. Then I go to the hour. And now on the, if it's not overbought on the daily, and if it's not overbought on the hour, that's perfect.
That's perfect, yeah.
Perfect. And then once I see it's not overbought, then I go to the minute. And then I see if on the minute it's overbought. If it's overbought on the minute, then I wait for it to pull back to the moving average, which it tends to like right here, right? It's overbought right now. Well, actually, let's go to the actual trading day. On the trading day on Friday, you know, after it traded, after it opened, it started trading above the 200 SMA. The 200 SMA is like, if it's trading above the 200 SMA, it should go higher. And because it's trading above the 200 SMA, it's going to use the other 2 moving averages as price point guides to see if it will go either higher or lower. If the EMA and the simple moving average are trading above the 200 SMA, 9 times out of 10, maybe 8 times out of 10, it's going to go higher. It might find some resistance like it did right here at this 960 area. And this is where you will go back in time and see, well, is 960 a previous resistance point? If it finds that resistance, chances are it's going to come and test the 200 SMA, right? That's where you're guiding yourself from this 960 to 920. That's 40 cents. You know, maybe if you got in at 875 and then you rode the wave to 8 to 960, and you're like, all right, it can still come back to the 200 SMA. I don't know if I want to hold on to it. I'm going to get out, right? That's what some day traders do in the first hour of the day. If it bounces off the 200 SMA, which it did here,
refuel
averages, and it's trading above the 5 exponential moving average, then
it's the MACD too. Look at the MACD right there.
Yeah. So even on the MACD, right? Even, yeah, on the MACD, once it found its resistance and the price point started to come to the 200 SMA, the MACD right here also came down, but it also crossed here.
Crossed back.
When you have that moving, when you have the MACD cross right here, chances are it's going to come back to the 0 line.
Yeah.
And then you're going to see like these green histograms. These green histograms are going to let you know that the momentum is changing to
trending upward.
And then you compare it to the
RSI,
where the RSI is also, it's like it went oversold. So this one is oversold. This is when you're like, okay, I need to start looking to buy, because once it's finished overselling, it's going to come back up. Right. So this is where you're trying to catch the bottom. Now, be careful with trying to catch the bottom. It's like a falling knife. It could really cut you. So you just wait for it to find support, which, you know, back here was, you know, when it made its support, it was because of previous support from when the market first opened up at 9:30, when the market opened up at 9:48, it made resistance here at this 920 area, pulled back to the 20 SMA, because right, we're using the moving averages as prices that it can come to. It held above that 20 SMA and started to trade closer to the 200 SMA. When all three moving averages converge, this is when it starts to go higher. That's what we really want on the long-term chart. When the moving averages start to cross on the long-term chart, expect a gap up. Expect it. It's coming. It's probably just going to consolidate for maybe a couple of days, but that gap up is going to happen because the moving average is consolidated. So you see that when the moving averages cross, it spiked up. It found resistance, came back down, right? And we use the RSI, the MACD to do that analysis. But now we start going to the TTM squeeze. And we see on the TTM squeeze, we have these histograms. And the histograms, when it's below the zero line, right? And the zero line is red, that means that there is some selling going on, right? That the histograms are red, the zero line is red, is selling. But the minute it starts turning yellow, take notice. Because once it starts turning yellow and the histograms start getting smaller and the zero line starts to turn green, that means that this buying opportunity is starting to happen. And we're just waiting for these histograms now to start crossing over the zero line. If it starts crossing over the zero line and the zero line is still red, that's okay. Hold. So right, because it's going to continue to go over the zero line. And we see that there's some green buying here. It's all right. You continue to use your moving average, or you use the moving averages, you use your MACD, your RSI to confirm everything else. That it's just consolidating. Don't worry, just wait. Just wait for everything to happen, right? And what happened, we got some more buying. We get all of this histogram activity. Now it's started to turn teal, or cyan, sorry. It started to turn cyan. We have some green on the zero line. So it's only gonna go up. You know, now we have this darker blue. It might pull back, but it was just consolidating that whole time. So sometimes this can, when it starts changing from this light blue to this dark blue, and you start seeing the histogram starting to get a little bit smaller, sometimes it can shake you out because you're like, okay, are you coming down or you're not? This is why I would say, look at the moving averages. Are the candlesticks trading above the moving average? Is it trading above the 5 exponential moving average? Is it trading above the 20 simple moving average? If it's trading above those, it's going to go higher until it makes a new high. And what happens? Comes back down to the 200 SMA. Every time when the new high is made, it wants to test the 200 SMA. Always, always, always. Like that's like it wants to test it. Now, if it comes down to the 200 SMA, that's the next thing. We don't know, but it can. So that's where if you're trying to day trade something and you know that new high is made and you said, all right, a new high was made, because it was making new highs here, all the way this whole consolidating right here from this time frame or this time to this time, it was making new highs until it really made a new high and it said we had enough, we tapped out, we're pulling back. Now you can start to judge if you want to wait for it to come back to $9.55, right? From $10.40. So that's why the moving average, yeah, it's very technical and it's very scientific at the same time, just because it gives you an idea of where a price can go. It's not guaranteed it will go there, but it gives you an idea. And that's what we want. As long as we have that hypothesis and the hypothesis is being fulfilled, then we know that, okay, at least it's going higher. We'll have an opportunity for it to go higher. Then I could sell or I can hold. I held it because It was on the long-term chart. It was a green candlestick. It was a green candlestick on the long-term chart. There was no reason for me to sell my position. When it spiked on this day and I didn't sell in the before the market closed, and then it sold off. Yeah, I sold it that next day. I said, you know, I'll just take my loss, whatever. But once this day started to happen and it was still trading above the 5 EMA, even though I got shook out the day before, I still have an opportunity to get the $100 back. So it's not like I'm losing a great deal. And then all the other technicals match that, right? Even the TTM Squeeze is saying it's still consolidating, but look at all this cyan. When it does all this cyan, like it did back here, it's just going to go higher. Like there's no other cause that I see that it wouldn't go higher than where I bought it. And then also, you know, like I said, with candlestick patterns, when you have candlesticks that engulf, when you have two green candlesticks that engulf a red candlestick, the chances are it's going to go higher. This is a bullish engulfing candlestick pattern. So it wants to go higher. There's buying there. When you have two red candlesticks engulfing a green candlestick, that's a bearish engulfing candlestick pattern. It wants to go lower. So those are key indicators right there that you can always pluck out from a chart to see if a stock will go higher. You see, it did the same thing right here. Two green candlesticks engulfing a red candlestick. It wants to go higher. So those are little tidbits. Hopefully this makes sense. I hope I'm not like just rambling.
No. It makes sense.
Because I know it took me some time to understand how to use the moving averages as opposed to thinking that the moving averages are against me in some way, shape, or form.
Yeah, take a little while. As you were talking, I was just scrolling and I noticed an unusual option activity on FRSX.
Yes, I'm so mad I missed out on that one. I'm so mad.
I see an unusual, that is for August 21st.
Yes. Oh, I'm so mad. Oh man, this is a good one. This is a good one. I really thought it was going to break out on this Thursday. But what did it do? It made a new high, came back, right? So, but like Fitz, I'm watching this patiently.
I see an unusual option activity. That's why I want to show you.
Correct.
August 21st. 180 days from now.
I have it. I don't have it. So I usually put like the ones that I really want to trade. I usually put it underneath above the 200 SMA.
Yeah.
FRSX is on there. But what did it do? It did less than 1%. So that's why it's not at the top. That's why it's not at the top. But I have it on my list.
Yeah, the open interest is 215 and the volume is 4,100. 4,100.
So this goes back to the options volatility that you were mentioning earlier.
Yeah, but what I have, you have the thing that can show you, where you can put below the TTM Squeeze, where you can show you what the volatility had, the historical volatility and today's volatility.
How do I access that?
You go over to you know that little cone at the top there.
The studies tab.
Yeah, the cone at the top, right beside the arrow, beside the wheel. Go to your left.
To the left.
No man, right away, right
okay.
there. The cone.
The
cone, right? No, not that. The cone. The cone. Yeah. Right at the top there now, you just type. Right, you type in V there.
V bear?
No, just type in V.
Uh-huh.
And you see volatility come up.
Let me scroll through.
Just type in VO then. VO, maybe.
Which volatility is it? Is it volatility?
The one. That is which one?
Volatility standard deviation, volatility switch.
No, just volatility, and then you put historical volatility. You see historical.
I just saw it. I thought I just saw it. Volume, volatility. I don't.
Just volatility and historical volatility. Click both of them. You don't see there?
Oh, which one?
You're gonna do two, historical and just volatility.
So I'm trying to, oh, there goes historical. Okay, there it is. Where do you go on here?
You see historical.
There you are, you're on the lower.
Volatility and implied volatility, sorry.
Implied volatility, okay. Oh, that makes sense.
You click both of them and then you apply. You click both of them?
Yeah, I have historical right now and I'm just double checking to see implied. Okay, I got implied.
Okay, put them in one. Just press on it. No, before you go. Now I was gonna tell it, instead of having two places, put them in one. They just go back right there.
Sorry, Joey, this is how you do it. Like the adding of the
just pull them in, put them in one box. Yeah, just click on it and draw it down. And they're in one box, right? And go apply. Okay.
I'm watching it. I'm taking all of this in.
Got you.
You didn't get it?
It's probably not showing because I already have the other.
Okay, maybe it's not gonna show. Put it on that's.
I'll put it by itself.
No, man. Put it on a bigger stock. Maybe I don't know. Put it on a bigger one, like PLTR or so.
No.
You sure you got it a while ago?
Yep, I'll put it on there. It's with all my other technicals.
What's supposed to show up right there?
Yeah,
both of them right there.
I think it's because like what tends to happen is that, and this is why I try not to use too many technicals, because sometimes when you have more than a certain number, like it's like okay, you gotta reduce the size.
All right, so what this does, it shows you can right away, if you're gonna buy the option, you can look on the historical volatility and the implied volatility. You can see where it is now. You can know, because you don't want to buy the stock when the volatility is up.
Oh, yeah.
You're buying the option. You know what I mean?
Correct. Because
it can just fall on you. You buy it for $10 before you know it dropped to $7 because the volatility dropped. So it shows you that the option is its volatility is at the low. So you can buy from there. So when the volatility rise, you catch the rise, go up. But it was the whole idea of doing that. If you don't get it perfect, I just share the idea with you that you can understand what I was trying to do.
No, you're absolutely right. I'm about to do it even further so that Joey can understand how to do it, because I see why I couldn't figure it out before. Yeah. So when you get your studies, like all these like technicals that we're talking about, Joey, right now, like you want to, when you have this beaker right here, this is the studies tab, right? You have two of them actually. Right, or probably only one, but I don't know if I have two.
I'm watching.
Either one helps. But if you want to create a study, go to create. Simple as, I don't know why I couldn't find it. And then once you, hold on, now, yeah. Oh, it's taking me to the wizard? Hold on.
Oh, that's when you put in a thing script in there. That's when you put in the thing script right there.
I'm not trying to do a script. I'm not trying to do a fucking script. Oh my God. That's not how you do it.
No, man. No, if you want to add it, you just click the one that you want over here, and then you just click add, and it go over there.
I already have it added on the studies. I want to make a new set. That's on. You set, add selected.
Click up the top. Click up the top where you see the three thing above there. Click at the top. Go up to the top. Yeah, click. Right. You want to? That's what you want then?
No, I want to create a new study strategy. That's what I was trying to do. So I can just have only the historical and implied volatility on there. but I didn't think it would take me to this new to this script. I'm not trying to do a edit script.
You're not trying to think script. So
No.
you just go back. Just get rid of that one and go back. Cancel that one and go back.
Declared. Where is it?
Yeah. So what are you trying to do here now?
Like I just said.
I don't fully understand.
I have a study that only has the historical on there without clearing everything. But at the end of the day, I'll just clear it and I can just put it all back. It doesn't matter. So like I said, the volatility.
Imply volatility. And then historical. You put both of them in one box. Right. So you got it there?
Yeah.
But so, you go back, you can click both of them in one box.
Yeah, I'm not worried about that right now, but okay. As long as I can see it. But that's what I want. At least Joey can.
I can see it.
So you can be able to play around with it too, because I don't know why I can't make a new study. I don't know what's going on with that. It's probably just me right now in my own defect. But as long as you're able to see where the studies are, and then you can type them in, then you'll see like, oh, okay, there goes the MACD. I can apply.
Right. Apply and you go back.
And then there it is. You have to double click it apparently. And then you can put it on the lower or upper part of the chart, like depending on if you want the MACD to be above the implied volatility or if you want the implied volatility below the historical volatility, whichever you want. Like same thing with the RSI, like, right? You can have it at the bottom and let's show you what it looks like, right? The RSI is at the bottom, the implied volatility and the historical volatility are below the MACD. So when you go to your studies, it's going to just reflect what you pretty much selected.
And as the way you can put both in one box, you can put both the historical volatility and the implied volatility in one box.
Yeah.
So they cross like the MACD to show you whenever they cross, just like that, right? So
when it crossed down, because I don't want to use it thinking it's like the MACD, but it kind of the implied the historical volatility. Okay, I have an idea.
It's so what I'm saying now.
Even below the implied volatility.
Yeah. So if you're gonna buy option, if you go to your left, go to your left. If you go to your left, where the blue is, right? It's right there, right at the bottom there. That would be the best place to buy an option when it's right down at the bottom there. So you catch the climb of the volatility go up. That's the point I was trying to make.
Yeah, when the implied volatility is below the historical.
Yes. So you buy that's the best. You don't want to buy the option at the top.
Right. Like
you want to buy it when it's at the bottom, like up there. You don't want to buy it there.
Correct.
So that's really why I'm sharing this idea. I was sort of looking because I realized that option volatility to play a big part in option.
Oh yeah.
So if we can understand where volatility or know where volatility is when you're buying an option, then it would be better for you because you can buy it on right away without much movement. The stock go right up, the price go up after you buy it.
So I know I'm kind of speeding through this part, but when it comes to the options chart itself, what happens is you'll get lines already thrown in there. And Joey, I don't know if you plan on doing options at all or anything like that.
Not now, but in the future. But that was a good nugget of wisdom to kind of understand the historical and implied volatility and the relationship and how to play it if you want to do the options.
Yeah. So maybe you could put this one. Does the option give you the ability to put it on that chart?
Oh yeah, like I'm gonna put it on.
Okay, so maybe you could put this one then on the option chart.
Right, but
so you can put back your TTM squeeze on the regular chart.
Before we do all that, I wanted just to highlight what's going on with the price options. The price on the option itself will give you a theoretical price. So with the volatility, using the theoretical price is going to give you an idea of what people think the price should be of the stock, right? Or of the option, the underlying value of the option. So you'll get the theoretical price and then the other moving averages. So if you're ever looking at prices on any of the options, always first look at the theoretical price on the time frames to see what they're saying the price is first. Then, you know, and now that I've never used the volatility chart, I'll just know if there's volatility going or if it's not going. So now I was to start applying that. So on my options, I have an options technical part. I'll just, you'll see it. I still have the 5 EMA, 20, and the 200 SMA, the theoretical price and the open interest. That's just the volume. So you get a chance of knowing what the volume is, which is down here in the MACD, RSI. So now I'll add on the volatility. So that is on there. Thank you so much, Fitz, for bringing that up.
Yeah, because you're welcome. I realized that play a big part, so I went into and I did some research and I found out.
Which it makes sense. I've been using the VIX as my volatility indicator, but that's the whole overall market as opposed
to the individual stock.
Correct.
All right. When you put that on, I want you to observe the one that you have on the left side there. This one that you have on the left side, look where the volatility was, when the green line. Go to your left. Go to your left. You see right coming down right there, come down to the bottom where it come down right to the bottom.
Oh, what are you referring to, the historical?
Yes. It's to be, so if you suppose you bought the option right there, look right there at the bottom there. You see what happened after?
Yeah, like we said,
it just climb after you bought it, it climb right up like that.
Yeah, we want the historical volatility to be below the implied volatility.
Right. So when you buy the option right at the bottom there, then now right away it go up. Okay, it have nowhere else to go but up.
Right. So I know sometimes not all the moving averages will show on all the contracts for you know, for if you do a long-term chart, because you know all the contracts are not that long, right? They haven't been around that long, or
right.
So sometimes you have to get away from the daily chart to go into like an hour or minute chart.
Yeah.
I'm still not seeing the implied volatility on the hour chart for Palantir. It's not on the minute.
Hold on.
Just make sure.
It's on the daily. Hold on.
Yeah, no.
It's on the daily. It's on the hourly.
The implied?
Yeah, I have it on the hourly, and it's on the 15 minutes too.
I don't know why I'm not good. I have it on there. Let me see. Let's go to the 15. Yeah, I'm not catching the implied, but that'll be something I'm gonna tweak around, especially since tomorrow the market is not open. So I have to look at and try to figure out why it's not showing up on my chart.
Is it possible they don't want to show you on the option chart? Because notice you have it on the regular chart.
Because what?
It's on the regular chart. Is it possible that they're hiding it from you on the option chart?
It could be. It could be.
Because it's shown on the regular chart.
Yeah, it shows on the regular, but on the options it's not showing.
Not showing.
And that might be something else, but on the stock price chart it's showing it.
Yeah.
So
at least you can use that.
So that's a good one. Let me load my study back.
Where you want to put back?
Not that one. I used to have that one. Oh, where's my TTM?
Go back same place, man. Go back same place over to the cone.
Yeah, I'm trying to get the TTM and all that stuff
Yeah,
back.
you can get it there too.
I think it was. Now I gotta add it. RSI. Now on the VWAP. Okay.
The middle one. Click strategy and see. Strategy. Apply, okay.
So I have that back on. I have the TTM back on, and now, like I said, I'll work with that implied volatility outside of this time. But I know there was a couple of other indexes that I know that we didn't get a chance to talk about, and I think we can apply some of them. One of them is social, which has like Pinterest, Twitter, Snapchat, all of that stuff. We see this exponential rise here. Doesn't make any sense. Like social media is just going to be the wave, right? It's going to be the wave for the future. This is probably one of these set them and forget them type of indexes. So if you are looking for a place just to throw some money, not throw some money, but to put some money in after it's done being overbought, because it's extremely overbought right now, which makes sense because Twitter went crazy the other day after their earnings. And so did Snapchat did too, but they did pull back. This will probably be one of those things that after it makes or finish making its all-time high and comes back to the 20 SMA, it'll come back to its 20 SMA. And if it holds that price, then it will bounce up to go higher. If it doesn't hold that price, then it's going to start trading down to test the 200. I highly doubt it will do that just because it's social media. Everyone uses social media. And then XLF energy. XLF in the energy space, same thing. This one, I actually would love to get in on it last week, but because I was playing with all the other individual energy stocks like AYRO.
But those ETF doesn't move much.
That's the thing. That's not all. I know that I'm mentioning them just because I was asked last week, do I have any long-term charts, not like ones for just day trading?
Okay.
And I was like, okay, true. I'll mention some. So these are those. Well, we mentioned three already: ARKK, one, XLF, and SOLE, SOCL. Sorry, those three. And then this very last one, I think we all probably know something about it. EEM.
Yes.
Emerging markets is another one. China is apparently still an emerging market. I still don't understand that, but it's China, Russia, Brazil, India. Those are the top 4 emerging market countries, and that's what's all up in this BlackRock index right here. So those are 4 indexes, or well, 3 indexes, 1 ETF that you can just set it and forget it. Forget about Apple. Forget about that. Like, don't worry about Apple right now. I don't even know how do people feel about Apple. Do y'all think it's going to go down? I'm an Apple hater.
I'm a hater too.
Good.
Why? Yeah. I don't think it's with the company. I think it's with the phone. Yeah, some issues with the phone, right?
No, I don't use the phone. I'm an Android lover. I like my freedom. I don't like monopolies.
Yeah. Not that Google isn't a monopoly, but Apple is.
You notice these binds on the EEM there. You notice these option binds there for March 21st, 21st.
For which one?
33 days.
For what? Apple?
EEM.
Oh, what about them?
You notice those options for the March 21st? I have a ton load of option buying there.
Oh. Oh yeah.
You saw them?
Yeah. Oh yeah. And it's especially the 21 cents one, like it's more than the actual open interest, which is crazy.
Wow.
And much more. Exponentially.
Wow. 15,000, 45,000, 102,000, 86,000. Wow.
So we look at the price of it all, right? The delta is pretty low, though it's at 13. If I were to ever buy a contract, I'd try to, go by what, I was advised with to get anything above 30 cents. That someone's more experienced than I told me, like, anything above 30 is much better.
You mean the delta?
Yeah, the delta.
Yeah. Yeah. If you happen to buy one of those small ones and it works, you're just lucky. But otherwise than that, you shouldn't really go below 40 or 50.
Yeah. Yeah, I like the one out of the money, maybe two out of the money. Mm-hmm. If I can get in the money, I'll be better off. But yeah, but that's the option on that for sure. But let's look at a couple. Let's look at a couple more stocks. I know that there's a South Korean company that's supposed to be coming out with an IPO soon. Apparently, they're supposed to be bigger than Amazon, and supposed to be bigger than Amazon because they do like not only the delivery of the food and delivery of other products, but they do other essential things like your laundry and other things of that nature. And it's like it was talked about last week that Alibaba and Amazon wanted to buy them, actually. And SoftBank is a big endorser.
Okay.
Let me look at South Korean IPO. It was C. Did it begin with C? Shit, I do not. It is. This is the company as it's starting to load up. Calpang. So apparently they're the ones that's coming out with their IPO and it's supposed to have like a bigger valuation than Alibaba when they first IPO'd and all this other stuff. So, yep, see, since Alibaba.
Do you know any way we can buy IPO before they come out?
Only unless it's a SPAC.
How do you buy the SPAC?
The SPAC is well, it's already on the market. Like, well, this one for this company, I don't even know. I don't believe there's a SPAC for it.
Okay, I understand what you mean now.
They're already out on the market, and they're just waiting for a private company just to merge in with the actual blank check company.
Because look at Bumble who came out last week.
Yeah.
Wow.
Yeah, that would have been nice to be in on.
Mm-hmm.
Before
I was to buy some. They said that it was like 40, and before it came out, it jumped to about 60. So I changed my mind.
Yeah, it went up, and I thought about buying it on this day at $71. I was going to buy the shares, and then we see that it went up to 84 the very next day.
Yeah, we wait until it come back down.
Oh yeah, I'm not playing with that. It's like Airbnb. Now it's at 200. James, do you still have shares in that?
What's that?
You have shares in Airbnb?
Oh, yeah. I love Airbnb for some reason. I didn't have total faith originally, but they just keep doing it. And I know they're going to expand. So I'm still holding.
Of course. So like you're married man. Marriage have been going on well.
I'm a polygamist now. But that's definitely, we having children for sure.
Wow.
I love it.
Yeah. I had to let go Mara. Mara was getting too